The reason why you want to start off with those two things is because typically people start off with their first account being a student loan.
Very true.
And then the next account they get is 4 years later, and it's a credit card. Then 10 years or 20 years down the line, when they pay off the student loan, their credit score drops because the first account they placed on there was a loan that will expire or it will close.
Right.
Credit cards don't close.
Unless you close them.
Or you're not using them.
Facts.
I prefer it not to be tied to something that's not cash flowing. So to be honest, sometimes I tell people, and I'm like, yo, just take out a loan, use the money and pay them back. Like, don't use the money for reckless stuff. You're just using it to build your credit. And then once you do that, you got 2 accounts reporting now. You got a good mix. You got one of each, revolving and installment. And then you can grow from there and just create better habits with the money that they're giving you so that you can build in the future.
Ladies and gentlemen, boys and girls, children of all ages, this is the Marvin Francois Show, your number one source for all things business, finance, and investing. And today is a very special day because our guest today is a credit specialist. She's your travel hacker's favorite travel hacker. I'm talking about math teacher by day, credit consultations by night, but she's one of the dopest entrepreneurs 365 days out the year. I'm here with the one, the only, Rashida Henriquez, a.k.a. Sheeta 3. How you doing, family?
What's up, Marvin?
How are you, bro?
I'm feeling good.
Fantastic. And I'm blessed and highly favored, but I'm better now that I'm talking to you. I'm happy to have you on here. Y'all, how's everything been?
I appreciate it, man. Life has been good.
It's been a minute since the last time. It's been about a year and some change.
A little bit.
And a lot of things done changed.
A lot of things have changed.
You know, you up now. I'm surprised I was able to get to you. I had to go through 4 assistants, 5 consultation calendars, a fax machine, but I got you back. How is business? How's life? How's everything else?
So everything, I want to say, like, you know, as you go through the journey of entrepreneurship and you go through the journey of starting businesses and actually getting the flow and systems down, it's a lot of bumps, but it's good bumps.
Okay.
Like learning lessons. I never really take losses. I take lessons.
So
I've been going through a lot of lessons and growing as a person. As a teacher, it's been going great. My school year is about to end, so I'm excited.
Fantastic. What do you think is the biggest, because you said you don't take lessons. What would you say is the biggest lesson? And I'm going to introduce her in a second. What would you say is the biggest lesson that you've just garnered from the last time that we spoke up until now?
Yo, the process is a process. You know, when you're kneading dough in the beginning, it's like, oh, I'm so excited. Let me pour this flour in it. And it's like, I gotta keep kneading. I gotta keep kneading.
Yeah.
And then it's at one point in time, you don't even know how much you've been kneading, but you just got so used to moving. And that's how it's been for me. Just like, I just keep my head down and go. And when I pick my head up, where am I? All right, am I where I'm close to where I want to be? Nah, all right, I can keep my head down and keep going. And that's how it's been, like, all day.
Got you.
Like you said, math teacher by day, credit by night. So I'm every day, man.
Got you. Well, let's dive into that, right? Because obviously this is your second time being on a platform. But there are some people who are watching this episode right now who may not be familiar with who you are. So for just a quick bit, take a second to introduce yourself and let the people know not only who you are, but what you do, where you're from, how you got your start.
All right, y'all. I got you, Marvin.
Let's go.
All right, so everybody who doesn't know me, all right, my name is Rashida Henriquez, also known as Sheeta 3 on IG. And yes, I say it like that every single time. I'm a math teacher, 7th grade math teacher. I've been teaching for the past 7 years. Outside of that, I actually got my start into credit because I got a denial. So I got denied for a mortgage about 6 years ago. And once I got denied for a mortgage, because I really don't like to be told no, I'm also the youngest of 5. I don't like to be told no. So guess what? I had to figure out why they told me no. And once I started learning about why they told me no, I realized that it was something that I didn't fully understand. And that's why I got that denial. So ever since that happened, I kind of been going down the journey of understanding credit. And once I started understanding, I'm not a selfish person. And I started asking questions. Next thing I know, a whole bunch of people around me got bad credit. And I started helping people around me. Once I started helping them around me, the list grew more and more. So I got my journey into credit because I took a loss, which was essentially a lesson.
Come on now. I love it.
A lesson. Outside of that, I teach math to 7th graders. And I also learned and noticed that math and money is the same type. It's the same equations. A lot of equations that I teach my students for just the standard that we have to learn, I use the same equations when I'm teaching adults how to calculate utilization, how to calculate their budget. All the math is the same. Math, money, money math is really learned in 7th grade. So I started tying that into teaching adults how to be better with their finances, and it's been a journey.
Got you. Are there any similarities and differences? Because like you said, you're essentially a teacher 24/7.
All the time.
Right? Because you're teaching math by day, teaching credit by night. What are the similarities and differences between the younger individuals that you're teaching when it comes to math versus, grown adults with mortgages and auto loans and, that are trying to apply for all these different things and teaching them about credit and how their finances work?
That's a very good question because
Hey, it's been a minute. Some things done changed.
So that's a very good question because students, once they get to like 7th grade, you start dealing with fractions and decimals and multiple decimal place values, right? And all the kids are all jacked up over, okay, this number now says 12.56. What is that? Put a $ in front. Oh, that's $12.56. As soon as I put a $ in front, everybody's good with the numbers.
Right.
It's incredible.
Right.
All of them. Even
Right.
the kids you might think are not growing or up to speed. Boom. Yo, it's $12. What's 12? If I had $12.50 twice, what's that? $25. If I gave it to them with no $, so for 7th graders or even for the younger generation, because they get money all the time, their parents give them cash, they understand the dollar value. They don't see the similarity until you start making a comparison on a regular basis. Like, look at math like money. Look at math like money. Put a $. Stop confusing yourself. Adults, how should I say this? They still learn the same way they did when they were younger.
Okay.
Your learning path doesn't change. If you were a visual learner when you were a kid, you're still a visual learner when you're an adult.
Facts.
If you were a tactile learner when you were a kid, you're still a tactile learner when you're an adult.
What's a tactile learner?
You touch. You got to touch.
Okay. So visuals with eyes, tactile is with your hands,
And audio.
audio. Those are the 3 learning styles. Got you.
The senses.
Got you. Yeah, okay. Makes sense.
So now you got, your learning style doesn't change. So for adults, it's like they have to retrain themselves because now they have behaviors that don't mesh with what they're doing now.
Got you.
Also, a lot of this math you learned in 7th grade. Do you remember how you were in middle school?
Me personally?
Yeah.
Oh, I was terrible.
Exactly.
Yeah. I was
So the core foundations of it, it's probably gone.
Got you. What do you think that it is in you that just has this I don't know if I would call it, just you gravitate towards teaching? Like, this is genuinely what you want to do? Because I think for a lot of us going through public school, or even now me as an adult, I look at public school kids or just kids in general and be like, I would never be a teacher. With you said, not only I'm going to teach by day, I'm going to go ahead and teach by night. I'm going to just immerse myself in any and all things that pertains to just educating people on what I know and what I do, right? Which is math and credit. What is it in you that makes you gravitate towards teaching so much?
I hate the feeling of not knowing.
Okay.
And for you, I hate it for you too.
Okay.
So if I know something and I can help you understand it and it can help you make a better decision based on your understanding and your education, that's a win.
That's a win. There you go. And then from there, you've just been rocking and rolling.
I've been rocking and rolling. And I mean, the way how I teach math in my classroom, like, they know how to, some of my kids, they understand point systems. They understand dollar values. They could calculate ROI on a property. Because I teach it that way. Like, I want you to understand it. They could calculate utilization. I had even my worst kids, like superintendent suspension kids, them bad ones.
The
bad ones.
Them
you know,
bad,
my
bad
babies.
ones. Yeah.
They could calculate. They get it once I pull the credit card out and I'm like, this is what this means. And then I start doing wild stuff like calling them by different credit scores. So if your behavior is bad, you a 400. You know how upset these kids are when you call them a 400 credit score?
Yeah, I'd be sick.
They be tight.
Yeah.
I'm on no 400 credit score. I'd be upset.
Right.
I say 750. Oh, we in the clear now. I got an A+. I got money. I'm like, you got money.
There you go.
Just getting the mentality right. So just, that's kind of like, we didn't know that. I didn't know about credit scores till I was 20-something.
Right.
It's the lack of not knowing. So for me, I get excited when now I'm like, okay, maybe something will stick. And if it sticks now, when you're 25, you might have a better chance.
There you go, 100%. So, and for me, that was a big reason why I made it a priority to bring you back, because the first time that we did the episode, it got a great reception. And I said, man, I have to bring her back to do what she does best, and that's teach the game, right? But we're not here to just talk math. We're here to talk credit, right? we here to talk credit because there are a lot of people who are watching this episode who do know of you from Instagram and other platforms, who know that you're one of the best when it comes to personal credit specialization, right? So I wanted to come on, bring you back on here so we could break down the game. Can we do that? Is that okay with you?
Let's go.
You sure?
We rocking and rolling.
Let's do it. Let's make it happen. So let's
First period.
There you go. First period. Let's go ahead and talk personal credit, right? Personal credit is huge. It's everything, especially in this country of America. Whether you're trying to get a house, whether you're trying to get a car, whether you're trying to get business funding, it all comes back to your personal credit. If I'm watching this episode right now, I'm seeing Sheeta 3 on a platform right now, right? And I'm trying to figure out the absolute best way to go ahead and start building my credit to put myself in the best position possible to do whatever it is I'm trying to do. Where do I start? I don't know anything about credit at all. Walk me through that. Take your time. Breathe.
All right. So you know nothing about credit?
At all.
So the first things we want to do is establish two things. We want to establish a credit card and a loan on your profile.
Okay.
The loan doesn't have to be attached to much. The credit card, we want it to not be a secure credit card. And when I say secure credit card, meaning that secure means it requires a deposit or collateral. We don't want it to be, but if it has to be, then, do what we got to do.
Gotcha.
We would prefer if you had some family member that put you on as an authorized user so you could borrow their credit and then use that to get yourself a nice unsecured credit card to start off.
Right.
People start off with their first account being a student loan.
Very true.
And then the next account they get is 4 years later, and it's a credit card. Then 10 years or 20 years down the line, when they pay off the student loan, their credit score drops because the first account they placed on there was a loan that will expire or it will close.
Right.
Credit cards don't close.
Unless you close them.
Or you're not using them.
Facts.
So that's where I would start. I'll prefer it not to be tied to something that's not cash flowing. So to be honest, sometimes I tell people, and I'm like, yo, just take out a loan, use the money and pay them back. Like, don't use the money for reckless stuff. You're just using it to build your credit. And then once you do that, you got 2 accounts reporting now. You got a good mix. You got one of each, revolving and installment. And then you can grow from there and just create better habits with the money that they're giving you so that you can build in the future. Got you.
Now, in terms of, because remember, we're starting from ground zero. If you had to give specific recommendations that people could look into to just start building their credit up and just getting the ball rolling on the personal credit side, do you have any that you would recommend to people?
Yeah. So honestly, I don't have a Discover card, but Discover is a really good place to start.
Okay.
Because they give credit line increases according to your behavior.
Very dope.
Good place to start if you have nothing. Another good place to start is not in a tier 1 bank like chasing them. You want to start in like a credit union. Gotcha. Because they're going to give you a high limit immediately, and they're also going to be more generous with you. You can work with them.
Gotcha.
You can also go to that same credit union and get that loan.
Gotcha.
And the interest rates are typically lower.
What are your thoughts? Because you also mentioned loans as well. What are your thoughts on? I know how you feel about secured cards, because I feel the exact same way. Hate them. Makes no sense, right? How do you feel about secured loans though? Because I feel like it's a similar ball game, but it's a little bit different in terms of how much more leverage those provide.
I love them.
Okay, talk a little bit more about that.
I love them for 2 reasons.
Well, first off, before you get into that, for those who don't know, what is a secured loan, right? And then break down those 2 reasons.
I got you. So I just told you guys secure means collateral or deposit. That means you got to put something up for them to give you back something. So secure loan means that you're getting a loan based on a deposit or collateral that you put up. So if you put up $10,000, that's the deposit. They'll give you a loan for that same amount.
Dope.
Because that's the collateral. The good thing about secure loans is 2 reasons. The first reason is it will not negatively affect your credit profile.
Right.
Because they don't have to run your credit because they have your money.
Facts.
If you run off on the plug, they will just keep it.
Right.
They will just keep it. So that's the first good thing. The second good thing is that you actually place an account on your profile that you can't go late on. Because like I just told you, if you make the loan, just give them their money back. You don't want the loan. You want the account reporting.
Right.
We got to have a goal when it's coming down to building out your personal credit profile. You don't want the money. You want the account. You want the essence of that account. You want the ambiance of this loan reporting so that you can use that as leverage for the future. Because right now you have nothing, so you need the collateral. You need to show that you could handle in this game. But in the future, you might not need to prove yourself as much because you showed evidence that you did 10,000, you paid that back, great. All right, you did 40,000, you paid that back, okay, great. All right, you did 60,000, you did 100,000, you paid that back, great. So now when it's come down time to ask for more money or more financing from the institutions, they looking at your track record. You look clean, brother. I'll lend you anything you want at this point.
Come on now.
Looking sharp.
Come on now.
Like that hairline.
You know what I'm saying? Good evening. Are you trying to leverage your personal credit to get business credit or business loans, but keep getting denied because your personal credit isn't where it needs to be? Takeoff Financial can help you restore your personal credit so that you can leverage it towards getting the funding that your business needs. So click the link above or below this video so that you can schedule a free consultation and see how we can simplify your finances and your life. Okay, fantastic. Okay, beautiful, beautiful, beautiful. So then from there, I'm thinking of other different like credit builders and things like that people can use. Like, what are your thoughts as well on, I know how you feel about secured cards versus secured loans. What are your thoughts on credit building accounts? One of the more popular ones are like Self and Kickoff. What are your thoughts on those?
I can't stand Kickoff, no offense.
Okay, talk about that.
I seen so many negative Kickoff accounts that I feel like people shoot themselves in the foot with that account all the time.
Okay.
And they're never really large amounts. Like you will never see like a $10,000 Kickoff account.
No, never.
So what's the point of it? You need a $200. You need a $200 account. You could have went to a bank, gave them $200 deposit, and got a $200 secure credit card.
Right.
Like you could have went that way instead of getting this Kickoff, which banks and institutions know is a credit builder. So it's not like it's really helping you. It's showing that you need help. So you're exposing yourself.
Got you. Do you feel the same way about Self? Because I'm
yes.
Really?
I know.
I like Self.
You know what's crazy?
Talk to me.
For Self, and I say this because I've seen hundreds of reports at this time. For Self to be a credit builder where I'm putting money into the account and you're supposed to report positive payment history and you have my money anyway, I find it very difficult that they report late payments. I find that very ignorant.
However, with Self, and now we getting into a little credit thingy going on right now because you in credit, I'm in credit. So let's talk about it. Let's talk about it. With Self though, for me, even though they report late payments, they're a little bit more lenient with the late payment thing. Because if I remember correctly, even when you're late with a Self payment, they give you an extra grace period of like 15 days. Or
That's
something like
a fact. I'm not saying that. I'm just saying that I don't feel like they should report that. You have the money. I feel like if you're a credit building account and you're supposed to be positive, I think you should be positive all the way because they could just keep your funds.
But on the flip,
they're not taking a loss.
But on the flip side, though, remember, we're trying to build positive habits. So I would look at the consumer that's holding it and be like, why would you even think to be
That's
late
a
in the
fact.
first place?
That's why I don't even like them. Because it's known as a credit builder and it's reporting negative history.
Okay.
So now you was building and you knocked yourself back off. You don't even need it.
Fair.
I've seen it so many times. I'm like, how did they report? That's incredible. It's insane.
And I'm assuming you feel the same way about like, I know the other one. I'm thinking about like the big three of credit builders. I know it's the main ones that people talk about. Self is Kickoff, and the third one is Credit Strong. You feel the same exact way about it.
All of them.
God bless you, sister. God bless you, sister.
If you don't, all right, I'm going to say this, and a lot of people don't talk about this as much as they should. Budgeting is really important.
Okay.
And that's the problem.
Okay.
So if you got the bad habits, then you won't always have the bad habits. And that the credit ain't really the problem, it's you. No offense. But it's the person. So for me, I'm like, I've had to fire clients because I'm like, yo, you gotta fix your habits because it don't matter what I do, it don't matter what's going on. You're gonna keep doing this.
Right.
And you're gonna cry about what you want and what you think that I want to get this goal, I want to have this goal, but you're not disciplined enough to get there.
Right.
So budgeting is important. And once you could do that, once you have the right budget and have the right structure, I agree with the credit building accounts.
Gotcha.
But
until then,
it's like I've seen it. So I have yet to see a clean self lender report.
I gotta show you my report then.
You're good.
Yeah, I do. Yeah. But I know I definitely understand where you're coming from. Okay, but that once again, different strokes for different folks.
Trauma.
Just that trauma. There is more than one way to skin a cat when it comes to building credit. And like you said, you can go to a secure loan route. Some obviously you and I are anti-secured cards. There's some people that's like, yo, secure cards changed the game for me.
I started with a secure card.
I did too, unfortunately.
I didn't know. Did you know after between 6 to 12 months they supposed to return your deposit?
Yeah. No, Capital went and gave me my bread back.
Till now?
Yeah, till now.
Call them and tell me when's your money back.
Yeah, we gonna have to. I'm gonna slap fire out of Capital and one. Like,
no,
they gonna have to.
They're gonna be Capital 2 because they're 2 slaps.
Yeah, 2.
And then gonna be Capital 3 because I'm coming back again.
But I mean, once again,
they took 8 years to get my deposit.
8 years.
8 years. And that's
how much you were? $250 or $500?
It was $50, bro.
Now they got to see me to believe me because that don't make no sense.
It's $50.
Crazy.
I help clients, they get their money back in 7 months.
Crazy.
I was like, 7? Hold the hell.
Crazy.
Hold them up. My money magically appear.
Yeah. Now they remember like, my fault.
My bad.
My fault.
You know what? I didn't transfer the check into the savings.
Yeah, right. And it takes 3
Capital
to 5 business
3,
days.
Come see me.
Come on. They forgot who they was messing with. So
serious though.
So but once again, like we said, when it comes to just different ways to just build out the credit report, it's more than one way to skin a cat, right? Once again, some people may lean more towards secured cards, secured loans, credit builders, cards, things of that nature. But at least we have an idea now of just some of the different routes that we can go if we have nothing, right? But now in the same vein, if I'm still operating as that person, I don't know nothing about credit, right? When it comes to having a properly structured credit report, what's my credit report supposed to look like so that I'm able to do a lot of things I see? I mean, I see Sheeta 3 applying for this card and that card and flying on this trip and that trip. I want to do that, but they don't know your credit report is properly set up in a way for you to leverage it to do those things. If I don't know what that's supposed to look like, walk me through that. What does my credit report got to look like to make sure I'm in position to leverage my personal credit?
All right, so if you have nothing, we start off with those 2 accounts, right? Yep. Those 2 accounts are going to give you your first 2 categories that you got to fill.
Dope.
You're going to get payment history for both because you got a loan that you're going to be paying on time, or credit cards you're going to be paying on time. The second thing you're going to get is utilization from the credit card only because that's the only thing that you get utilization from. You're going to get account mix from both because you have one of each category. You're only going to get 1 inquiry. You don't have to get Discover, but I mean, I just said Discover because they're very healthy and very lenient sometimes.
Yeah, they're cool.
Inquiries. You're only going to have 1 because the secure loan doesn't require 1 because they don't need to see your credit. And then for the age, you're starting off at 0. So now it's just building the habit. It takes time because with age, you can either earn it, buy it, or borrow it. So in this case, you're earning it at 0. You just have to grow with the habit and build that up.
Got you. And then from there, you cooking with Crisco.
You cooking. Because then now you start to, once you understand credit, then you can start to branch off to, all right, what type of credit card do I want to use? What am I going to do now? If you need a car, now you set yourself up pretty well.
Got you. So then now that's a perfect segue into the next point, because one thing that I've heard a lot of different like rumblings about within the credit space and just on the internet and social media in general is credit card stacking. I think I've even heard you talk about it, right? Let's dive a little bit into that. For those who don't know, even for myself, because I'm still learning about it, what exactly is credit card stacking and why is it important to just the credit process?
So, all right, in a lot of different worlds, credit stacking helps people get large amounts of credit to do investing. So I'm in both worlds, large amounts of credit to do investing and large amounts of credit so that they can go and travel.
Okay.
So for investing, it's important to understand that these credit reporting agencies, Experian, Equifax, TransUnion, that they are 3 different companies. They got 3 different CEOs, CFOs. They in 3 different states. Like they're not cousins.
Right.
They're not even distant cousins.
Right.
So once you understand that, some banks only really have relationships with each one of them, or however I might only be cool with you, Marvin.
Facts.
I might not even like the producer.
Oh dear. Josh just called it straight. Yeah, go ahead.
Everybody get to smoke. Not playing. But in that case, and that's a situation where a bank might only have a relationship with one agency. So you're able to actually use whatever they do, low-key against them.
Gotcha.
Because if I know how you're moving, then I know what to do to get what I want, you know? So, and for a long time, we didn't know these things. Like, it was kind of like an unkept secret, or which is kind of something that people didn't share. But, that's why credit stacking is important, because you can get more for less movement. So instead of going to a bank that looks at all 3 credit reporting agencies like Capital One, you can go to one that may look at 1 or 2.
Right.
So instead of it being 1 inquiry across the board, it might just be 1 in each. But you got 3 different financial institutions you have now. So instead of having 1 inquiry from Capital One on all 3, you might have 1 from Chase, maybe Federal, PenFed. And now you got 3 different banks, 3 different products with 1 inquiry across the board. So it just really depends on how you're moving.
So essentially it's maximum funding for minimum inquiries, essentially.
Yeah.
Now,
because when you have too many inquiries, you look thirsty.
And we don't want to look thirsty. We don't want to look needy. Because then the bank's going to look at it and be like, I don't even
They pressed.
Why? What are you doing here? I don't want you a part of my yeah, go away. Depart from here, Satan. You understand? It becomes one of those kind of situations. Maximum funding, minimum inquiries. That's the name of the game.
That's the name.
So now that now leads me down a rabbit hole of a bunch of different questions. So number one, right, we want to be able to, the importance of credit stacking, like you said, it allows us to get as much money as we possibly can without having to get 18 different inquiries on Equifax, 14 on Experian, 32 on TransUnion, right? So now, number one, if I'm listening to this, simple question, how do I go about finding out where certain banks pull from in order for me to stack credit cards or just stack credit?
All right, I'm gonna tell you something.
Talk to me.
It's not, they're not gonna admit it.
Okay.
So you just have to look for the crumbs. You have to be a detective.
Okay.
There's a couple websites I go to.
Let's do it.
I like credit boards.
Okay. Say that again.
Credit boards.
Okay.
So what people do is they share that information, and you can actually go and see where they live. They might say where they live, what they apply for, and then where the inquiry hit. And now you got a list, and you can use that to help you decipher, like, okay, maybe if I live in Kansas, they pulling from Equifax instead of Experian. Or if I live in California, they looking at Experian instead of Equifax, because it might be a regional pool. So you can use that as a database to figure out what you want to pull from, because everybody gets their list a different way. I've seen hundreds of credit reports, and I've seen hundreds, actually not even hundreds, probably tens of thousands of inquiries.
Yeah.
So for me, I'm already seeing where they're pulling at, because it's on the paper in front of me. If I'm fixing a credit profile, I can see if you got 50 inquiries, I just got 50 different banks and where they pulling from. You know what I'm saying?
Yeah.
In real time.
There you go.
So you can, if you have a credit repair company or a credit company, you can literally create your own list and data bank based off of the information that you're receiving.
So now, if I'm trying to, now we're stack, because would you say stacking and creating a sequence more or less the same thing, just different, same thing? So
in my opinion. So
now let's talk a little bit about that, right? Credit card stacking, building out a sequence. I understand why having a sequence is important. Now I want to figure out the what, as in what different banks should be a part of my sequence. So if I'm trying to build out a funding sequence, what are some different, do you personally have any recommendations on different cards that pull from certain bureaus that you would recommend to the audience so they can kind of have a foundation for them to start building out their own sequence?
So I would say, if you have a credit profile already, go to your credit profile and see what you already got.
Got you.
Because sometimes people negate what they have in their back door. I will also, not be a nosy neighbor, but I will start asking people around you, because then you could get real-time data. Data is important. So once you do that, you can actually go back and say, okay, I need to get what. First of all, let me cut you back. The first thing you know is, what's your goal?
Very important.
What are you trying to stack the points for? Remember, I told you, it's two different worlds I live in. The investing world and the travel world.
Right.
If I'm trying to travel, there's a different way I'm going to go. There's different cards I'm going to go for than if I'm investing. If I'm traveling, I'm going to hit cards that have annual fees. I'm going to hit cards that have certain things, no zero APR periods. It might be right away. My conversation and situation going to be different. If I'm investing, I'm looking for more low interest cards, zero interest cards with the longest time periods. So it really depends on, first, what's your goal? You get what I'm saying? Now, I'll give you a quick one for if you're looking for travel. For travel, especially if you're starting off and you have no idea, I will go with low annual fee cards or no annual fee cards to give me high sign-up bonuses. So the first card I'm going to go with is Built. I know you like the Built card.
I love the Built card. I got it on me right now.
The black, it's like that black thing.
Come on, bro.
All right, so that's the Built card. There's no annual fee. You can pay your rent with it, and you get your points. You can use that for travel. I actually use my Built points to go to Vegas.
Very dope.
Right? Then you have like the Chase Sapphire card or the Chase Freedom Unlimited. Then you have American Express every day. Those three cards, I would say, for somebody who's starting off, that would be a good trifecta, because you hit a lot of the travel partners and travel institutions with those top three. That's my top three. People have different ones, but that's for somebody who don't start and they like, I don't want to have a whole bunch of annual fees. I don't know what I'm doing. I would start with that so that you can get warmed up into the situation.
Got you.
Because the only card there that really got a fee is a Chase Sapphire card. That's a great credit card to have.
Got you.
On the investing side, I will look at zero interest. So like Bank of America, they have a zero interest, zero APR for 21 months, right? That Bank of America typically pulls from Experian. U.S. Bank, they have another one. Last time I checked it was 18 months, but sometimes it varies between 18 and 22 months. So now you got zero interest if you're investing for 22 months. And the last one I would say, depending on where you're going, I'm not saying Wells Fargo. I just blanked on it.
Take your time. Breathe. This is a safe place. There you go.
I just blanked on it. Dang. It's going to come to me after. But essentially, you want to go for zero interest cards that have the longest interest periods for the cheapest way, because you're investing. So you don't really care about a travel perk. I don't care about flying for free if I'm trying to flip the bag. It doesn't equate.
Right.
You know what I'm saying? So that way I keep more on my profit. I can maneuver that way. But that's, you typically don't want to invest on your personal side. But if you had to, That's what you would have to do. And on the business side, you want to look for that too if you're investing.
Facts.
So the rules apply for personal and business.
Got you. So what's dope about that is, in your sequence, you named a couple of different banks. I know that for myself, being in the space as long as I have, I've heard about, and I'm sure you've heard about it too, like tier 1, tier 2, tier 3, tier 4 banks, right? I want to talk a little bit more about that because when it comes to building out a sequence and credit card stacking and things like that, how much do you personally weigh that in, or how much would you tell other people to weigh that in when it comes to building out a sequence in terms of, we know tier 1, I believe, is national banks.
Mm-hmm.
Tier 2 is regional.
Mm-hmm.
Tier 3 credit unions, and then tier 4 subprime financial, if I remember correctly. How much am I weighing into building out a sequence, the different types of banks that I have in my sequence, or is it more just about the product itself? What would you say?
That's a very good question.
I've been sharpening my sword.
So I would say it's good to be in the top 3 if you can't start at number 1.
Okay.
So regional banks, I've noticed regional banks and credit unions, they're more generous.
Yeah.
National banks, they want more paperwork.
Yeah,
in my opinion.
They bougie.
They're super bougie.
Very bougie.
So with that being said, like you can go to a regional bank like Truist, M&T, and you can build relationships up and get more from your financial products than you could essentially from a Chase. Now, I'm not saying Chase not giving out money. They are definitely giving out money. But if you were starting off, it's easier to get in the door and grow with a regional or credit union bank because credit unions are member friendly. Like everybody knows. It's like everybody know the popular girl. Like, and that's Chase. That's the big ones, right? Everybody knows them. So it's when they start getting love, they like, oh yeah, you know what I'm saying? You see me out here?
Yeah.
They need the members. And because national banks are so easily accessible and that's what makes them kind of like coveted, the credit unions they're not getting as much money because if we don't put our money in the banks, they can't run. So they need members. They want more members. That's why the interest rates are typically lower than your national banks because they are trying to incentivize you in the ways that they can compete. Right. To get you to bank with them. You get what I'm saying? And then, eventually you build yourself up till you have your own banker and you talk to them how you talk. You talk nice to them how you talk nice to them.
Pull up on them. How you doing, Eduardo? Whatever that banker's name is. What's going on, Esteban? Well, I don't know why both of them start with an E. But
I don't know.
Well, there you go. So now I have that. I kind of have a 2-pronged question. So let me go to this direction first. So you talked a lot about the importance of like leveraging tier 2, tier 3 banks. How do you feel about tier 4, the subprime financial bank?
Basura.
Is it though?
Is it really?
Not, why you say that? Why you say that?
I say they're trash because they charge more. Have you seen some of the stuff? Just some of these banks, they charge you to send you your statement. That's disrespectful. How you charging me to send me? They charge you $15, $10 to send you some paper.
Okay, fair.
And then some of them don't even have a electronic option.
However,
Basura.
However, some of those subprime, like I know a lot of tier 4 banks fall under, I think it's called Elon Financial.
Depends. So Elon is just they have credit unions too.
No, but Elon. Would you consider Elon tier 3 or tier 4? Because from what I understand,
Elon banks, they back some tier 2 banks because Elon Financial is not really, they're like just a financing institution. So they just deal with credit cards and they're like sometimes even line of credit loans. They're just a backing. You can't go into an Elon bank and it's named Elon Financial Bank.
No, I know that. Yeah, I know that.
So they're just backing the bank.
Yeah.
But that still doesn't mean that the stuff they're doing is not trash.
Fair.
I mean, it's my opinion. I'm very opinionated.
No, I understand. No, now listen. When I talk about subprime, like I know subprime also categories and like for example, credit one, we don't do that.
Disgusting.
Yeah, I'd vomit on this podcast right now if I didn't respect Josh and his equipment. Right? Be careful. Be easy. It's all right. It's okay. It's okay. No, but like I'm not talking. I was really more so referring towards Elon because from what I understand, Elon has always fallen, even though it's not a bank, it's a backing, has always fallen under tier 4, and I know a lot of U.S. Bank is Elon. Am I wrong, right or wrong on that? I think U.S. Bank is Elon. No, Ameris. I think
Ameris is Elon.
Ameris.
You can always tell by when you click the credit card, it segues you to another.
Bro,
you can always tell. It looks different. It looks nothing like the website.
It's scary.
You were just
scary. It looks Flagstar is another one. Ameris is another one. There's one more that I'm missing.
It looks. It's a whole bunch. They look nothing like interior. It's a whole bunch of them. They look nothing like the essential website of the bank. So if this bank had blue skies and ducks, when you click the credit card, it's taking
now you're in a dingy trailer park. Yeah, it's bad.
You going to Batcave.
Yeah, it's bad. It's at the Batcave. It's bad. It's bad. But no, yeah. To your point, yeah, no. The people definitely do sleep on the tier 2 and tier 3 banks. I try to give tier 4 a little bit of love just because I've known that some tier 4 banks were backed by Elon and have had some
the ones that,
like, for example, Ameris, I think they have a card where it's like 0% for like 18, 20 something months.
That's love.
Beautiful.
That's because it's a credit union. All right,
Ameris a credit union?
Let me specify.
Talk. Let
me specify.
Go ahead. Be easy.
Tier 4 banks that have predatory practices.
There you go. That's it. That's all you had to say. You just got to qualify your statement. There you go. So now that brings over to my next thing, right? Because you talked about building relationships with bankers. I know that's super important when it comes to business. Does that weigh all that heavily when it comes to the personal process as well?
Honestly, I don't know.
Okay.
I'm gonna keep it a buck because I don't know if sometimes, like, I have relationships with my bank managers at Citizens. I have one at Chase, and we've been cool since I've been banking. And if I had an issue, I go sit down. And I don't know if sometimes I get certain things because of that on the personal side. I know on the business side it helps a lot because they're able to navigate and they want, that business. But on the personal side, I wouldn't be able to tell if it's because, Sheeta comes in and sometimes brings food, or I come in sometimes and I bring the last. Like, I don't know. Bro, because I refer a lot. I don't know.
Okay, that could probably be
it. Could be that.
Yeah.
I'm not 100% for me to be like, yeah, that's
gotcha.
Because when I came into one of the branches, I brought like 12 people with me.
12 people?
Yeah, it was a nice time.
Goodness gracious. Well,
I just kept sending people over there.
Well, but that in and of itself, I think that essentially answers the question, because that's what relationship banking is, right? You're building that relationship. You're providing value to that branch manager and that banker and that bank location because you're bringing in business. So in turn, yeah, maybe relationship banking does have an effect on the personal side.
If you ever in Brooklyn,
you understand what bank was this?
Citizens.
Yeah,
you said it was in Georgetown. That's my spot.
What you know about Citizens in Georgetown?
Yeah, you got Ralph.
First off,
I got my Sapase in the back.
You know what I'm saying?
Like, you got Lucas in the front.
Come on now.
It's plugs when you got first name bases. You know what I'm saying?
Okay. We gotta talk after this episode. We gotta talk after this episode. Nah, but okay. So the building of the relationship. Another thing, and this has always been like a myth. I've never been able to get this confirmed anywhere. The when it comes to the application process, people always talking about, oh, you increase your chances of getting approved, and you also increase your chances of getting larger limits if you apply at 3:42 in the morning when nobody is working and there are computers. Is there any truth to that as well?
I've honestly never tried it.
You've never tried applying it?
I sleep. I wake up,
bro. When I first got into credit, I was like, if I want to get approved, I used to be up 2:30 in the morning
trying to try that,
bro.
I've done them at 11, 12 o'clock.
Talking about, look, watch this, hitting these. I'm in front of the computer like this, just waiting for 3 o'clock to apply.
The only thing I would say is that you're gonna hit a computer,
right? So
you're probably waiting for that. If I was to say like, yo, is this myth 1,000% factual? It probably was. I wouldn't know as so much anymore.
Got you. So that's not even something that you would say. So you don't even recommend, because once again, when I came in, that was a huge. Well, if you're applying for credit, you don't recommend that to nobody.
I don't not recommend it. It can't hurt.
Right.
I will try some stuff. I've tried to stay up to do that.
Can't. It's not happening.
It's not working. I wake up at 4:35 and I'm like, all right, I gotta go to the gym. By the time I get back and I look around, I'm like, oh, I didn't do the application. It's 9:30. So I'm gonna just do the application when I do the application.
Gotcha.
And typically, if I'm doing that, I'm probably doing it after 8 o'clock anyway. So closer to 12 than 3 o'clock. But for people who's doing that, I would have to see it, because sometimes the air be real.
There you go.
The gas.
Listen,
it up.
I no longer partake in such practices, but I would be remiss if I didn't ask about it, because, like I said, I know there are a lot of people who are watching this who are new to credit, and I know when I was new to credit, that was all I was hearing about, and it never did nothing for me. But I want to know if it did something for you.
What I would say is, yo, when it comes to credit, yo, try it. Shoot your shot.
Yeah, there you go.
The credit police is not coming up to to catch you. Like, oh, you tried this 3 a.m. hack. Like, they're not coming for you. So if it works, that's great. If it doesn't, oh well. Like,
just keep it pushing.
Keep it pushing.
Okay, got you. So we talked about, from relationships to different tiers of banks to the 4 a.m. application myth and all that. Covered a lot. We still got a lot more to cover though. Let's talk a little bit, because you touched on it earlier in terms of like some different travel credit cards that you you would recommend. We're going to talk about travel hacking in a second. If I bring you on here, we don't talk travel hacking.
Let's go.
Well, not yet though. I want to talk about just different credit cards, because the beauty of credit cards, and you know this, and I know this, it's all about how the perks and rewards that are attached to some of these credit cards benefit your lifestyle, right? You may be somebody that goes to restaurants each and every single week. If you don't got 2 to 3 credit cards that benefit you and that lifestyle that you live in, you losing out on a lot of money. In the same vein, maybe you like Sheeta 3 and you know, catching flights from here to Kalamazoo and beyond, or maybe you are somebody that spends a lot of money on gas and you don't have credit cards for that. I want to talk a little bit more about that. I know you touched a little bit on, you know, travel credit cards. Let's say I'm somebody that dines out a lot. Do you have any personal credit card recommendations for, you know, that for like perks that revolve around like restaurants and eating out and just food in general?
All right. So yeah, absolutely. You could touch on for travel, right? And to be honest, a lot of people, I was talking to my gym teacher the other day, and he buys $200 of groceries every week.
See? How many kids you got?
I don't want to give him more kids than he has, but I want to say 2.
Okay.
I want to say 2 and his wife.
Okay.
$200 worth of groceries every week. And he spends a debit card. And he's like, Sheeta, he's like, they don't call me Sheeta. They go, Henriquez, yo, I've been hearing you on a thing. You keep popping up on my phone. When I'm home, I feel like you're talking to me. I'm like, what do you do? He's like, man, I know I got to get back. I got to get a credit card and do this because it made no sense. I'm paying for this groceries every week in cash, a debit card. And I just get nothing. And I'm like, exactly. I low-key call it anyway money.
Okay. Anyway money?
Anyway money, because you're going to spend it anyway.
Got you. That's funny. Okay.
You might as well get something for it.
Facts.
So if you're going to spend the money anyway, like you said, you dining out every week, or you like, you know, Mr. A, shout out Mr. A, he's my guy. I'm sorry.
You good? Go ahead.
You doing groceries or you doing restaurants, right? Most credit cards that have travel benefits, they give you multiplying categories in those 2 sections. So for American Express, those 2 sections give you 4 times the points. So now you spend $1, you get 4 times the points, as to spending $1 and getting nothing. So now you got American Express Gold. That's my top. That's my recommendation. Or the Chase Sapphire.
Gotcha. That's your top 2, dining wise. You get those, you good to go. You could go with Crisco.
That's 2 banks, right? And the reason I said that, remember, I mentioned that Chase Sapphire card as a starter card anyway. So the Amex Gold card comes with a $250 annual fee. It's an annual fee that's justified because it really, when you use everything, it comes down to $10. But then the $10 is wiped out once you get your sign-up bonus in, once you're able to take your first trip for nothing. Like, once you're able to actually use all the benefits of the cards, the $10 is really like dust.
Gotcha.
So for that, I would say that's where you want to start. You want to start with a card that has the most multiplying categories for points, not cashback, not specific airline miles. You want points. That's the flexible area.
Gotcha.
You don't want to be stuck in one category.
Fact.
Signing up with Takeoff Financial was really the best choice for me. It allowed me to take control of my life. I know that some people may think that that's really dramatic, but it's not. I feel like credit is really important, and signing up with them allowed me to understand that. I just want to say thank you because I think that you guys have definitely allowed me to feel comfortable. You allowed me to feel liberated. You allowed me to feel that it's okay. It's okay not to have great credit, but it's not okay to stay in that situation. So thank you guys for embracing me and allowing me to have a new life.
Head over to our website at takeofffinancial.com and let's get your credit score to the moon. I want to talk a little bit, now that you brought that up, I want to touch on the points thing too, because in me just learning more about credit myself, one thing I've learned, because you mentioned Chase and you mentioned Amex, I've heard of something when it's come to points about like the point system and like 1-to-1, right? And about essentially how like when it comes to credit card points, not all credit card points are made equal.
They are not.
Right? So talk a little bit about that, because I know that there's credit cards all across the board that say, hey, you can redeem X amount of points or you get this many points when you spend or whatever the case may be. But from what I'm learning and from what I'm understanding, like there are not every single bank that's giving you these points, you're going to be able to take them and, you know, go leverage them like you would be able to do with other banks. Talk a little bit about that.
So like I'll give you a perfect example.
Let's do it.
Because I have some points sitting. I have a Navy Federal's business card. I have 2 of them, right?
Dope.
And I get points for those categories. But the points are not the same as the points that I get from my Amex card or the points I get from my Chase card. Those points are a 1-to-1 ratio. So if I have 9,000 points, it's technically a percentage of that. I have $90 worth of travel. Actually, I think that's $9. My math might be off today, but it's not the same equation, right? So if I have 90,000, it's not the same. So with that being said, that is just cash value. So if I transfer that to pay for something, I'm just getting the cash value of that flight, not the points value. And sometimes that can fluctuate. Now I'll break it down a little bit more.
Let's do it.
So if I go to, I like this one. I go American Airlines because I do this one a lot. American Airlines, I might buy a ticket from here to Charlotte. The ticket, cash value wise, could be $150, right? So if I have those Navy Federal points, I could transfer those points over, and the cash value would pay for the price of the ticket.
Okay.
Because those points are not travel points. They're literally just the cash value.
Gotcha.
Now I go to Chase, or better yet, I go to Bilt. I have my Bilt credit card. Bilt credit card is one of the only cards outside of Barclays that transfers to American Airlines.
Facts.
American Airlines flies to Charlotte all the time.
Mm-hmm.
I can get that same flight for 7,500 points and $12 round trip.
Mm-hmm. Mm-hmm.
7,500.
Mm-hmm.
Whereas if I had paid for that flight with with that $150, that would have cost me 15,000 points.
So not all points are created equal.
Not all points are created equal.
So what is the big three points wise? Because I know the head honchos is Chase and Amex, right? It
You got Chase and Bilt is coming up there.
That's what I was about to say.
Don't sleep on that.
I don't know if you saw, but there was an article, because I did a video about this. There was an article that came out on Bankrate. I think like this year, Bilt has like the highest point to something ratio of all the cards.
Because they give so on rent. All right, so we're talking about
Tell people, there's people that's watching this don't even know about the Bilt card. Talk about the Bilt card.
All right, so this is my thing.
Yeah.
All right, you know I love the Bilt card. So if you're a renter, right? Let me talk to you right quick. If you're a renter, you pay your rent anyway. This is anyway money. Again, I'm not making you change a habit.
Mm-hmm.
I'm not telling you to do something that you're not already doing it.
Facts.
That you're not already doing.
Big facts.
I'm just telling you to do it a different way so that you get something. So Bilt credit card, if you already pay rent, you should get the credit card because it's the only credit card that will give you points for paying your rent, and it does not charge you credit card fees. So if you typically go on a portal and you pay your rent, it's going to charge you the convenience fee or the merchant fee because the landlord's not going to take that.
Right.
So you have to pay more to use the card. Bilt, you don't have to pay more. You pay flat rate. And the reason is because instead of putting your credit card number, Bilt actually gives you a routing number and a checking account number that's attached to your credit card, and they charge your card as if it was a checking account.
Mm-hmm.
So now it goes through like eCheck, and eCheck, there's no fees. The best part about it is that whatever your rent is, you receive that same amount in points that you can use with their travel partners. Now, you might not think it's important, but it's not until you have to take a flight or go somewhere that you're sitting there and all the rent you've been paying anyway has accumulated to a flight or a hotel stay or Beyonce tickets. I don't know if it's in a portal, but you get what I'm saying. Like you can pay for entertainment with the points too. Mm-hmm. So if you've been spending the money anyway and you're not getting anything for it now, you hustling backwards. Mm-hmm. Especially if you live in the city, but you're renting $3,000-$4,000 a month. That's 48,000 points per year you could be getting for something that you're doing anyway.
Anyways, come on now. Now, however, you want to provide a caveat though. I think there's a cap on how much points.
100,000 points. It went up from 50 to 100,000.
Hey, bro, I thought it was 50. They brought up to 100,000.
100,000.
Oh wait.
Your rent got to be $8,000 a month,
bro. If you paying $8,000 a month, you don't need a Bilt credit card. You need Jesus. If you paying $8,000 a month, you do not need the Bilt credit card. Call me so we can pray. I didn't know that they brought it up. I thought it was at 50.
Nah, it went up like a couple months ago.
Wow.
They increased it.
Yo, Bilt is going crazy.
I told you.
Do you think that, because I hypothesized this, and the way they moving, they might just do it. Right now, you could only use the Bilt MasterCard to pay rent. Do you think we may see a scenario within this year or next year where they let you use the Bilt credit card to pay your mortgage?
Yo, that's the question everybody asks me.
Bro, if you do that, I'm getting rid of all of my other credit cards. What are we doing?
That's the question. Literally, everybody asks me that.
And what are your thoughts? I
mean, I wouldn't see. I don't know. That would be on what they do. I know that as far as building out the relationships to having credit card partners, they're killing that.
Right.
Especially with that, like I said, outside of Barclays, you can't get American Airline miles no other way through a transfer partner. So they've been attacking the game a little bit differently, and it's very interesting to see where they'll end up, like, and where they go with that. But the CEO is a pretty dope, really dope dude, really dope dude.
Yeah.
A lot of other companies he's built are really about helping people, and this card is a card that will literally help people because it also will report your rent, like rent reporters.
Yeah.
And not charge you for that either. It's a service of the card, and it's no annual fee. It's like people like they like, yo, you just talk about the card so much. I'm like, yo, it's some good product.
It's a great product.
Some good dope.
It's a really, really great product. I got it. Sheeta got it. And if you watching this, make sure you get it too. But watch this. Let's say they go and apply for the Built MasterCard, right? And they get denied. Damn, that's tough.
That hurts.
It's one of those things. I don't know if you ever got denied for a card. I didn't got denied for some cards way back when. You go for a walk afterwards. You got
feel
one.
it?
Yeah, it be in your chest a little bit.
That's okay though.
All right. So now, but let's dive into that though, right? She just told me to go apply for X, Y, and Z card. I got denied. Damn. Life is tough, but it's not over yet. Do you have any tips, recommendations for somebody that will go out and apply for a credit product and get denied, and some different things that they can do to bounce back from that?
So look, remember I tell you you don't take losses. You take lessons.
Yeah.
A denial letter is the lesson. They have to tell you why they denied you. I compare it to like dating. If you go, you at the bar, you sipping on a margarita, feeling good, you approach shorty, she like, what's up, Marv? It's my name, Francois. And then she like, nah, I'm good, shorty. She don't have to explain herself. She don't have to explain herself. You can walk away and feel good about it.
Right.
The banks can't do that to you, which is good because they have to tell you why. So if they tell you like, hey, you have too many inquiries, they're not going to say that. They might say seeking too much credit. That means you got too many inquiries. So now you know what you got to fix.
Facts.
Now, when you if you walked up to her and she said, you know what? You came to me, you wasn't really clean cut. I like a guy that works out some more. Now you like, all right, yo, next time I approach shorty, I might
Focus.
Next time I approach her, I might, come fresh off a fresh haircut. I might go to the gym for the next 6 weeks to see what she say after because she gave you back some feedback. The banks have to give you feedback as to what you have to fix.
Big fact.
So if you have a collection on there, they have to say recent collection or public record. They have to tell you.
Right.
So now that you see what's wrong with it, if you fix it, the next time you come back, they cannot say like, oh, we still see these things because they're not there.
Right.
So that denial letter is your cheat code as to what's wrong.
That's a bar. That's 100%. Now on the flip side, right? Watch this. Let's say we apply for a card, whether it's Built, Amex, Chase, whatever the case may be. We get approved, but they give us a really, really low limit, like something way less than what we thought we was going to get. $1,000, $2,000, $3,000. How can we go about, is there a way for us to now spin the block, spin back, and go ahead and get a little bit more money, or how do we build from that? Because I once again, we want to try and get as much money as possible.
Facts.
Right? So how do we deal with a situation like that? We apply for a car, we got approved, but we didn't necessarily get the limit we thought that we were going to get.
So I would say a couple of reasons why you don't. I noticed that you don't get the limits you think you're going to get because your utilization wasn't where it needed to be. So if utilization is in prime section, typically you're going to get higher in comparison to your other accounts. So if utilization wasn't where, if it was in the high 30s or even high 20s, you're going to get a lower limit. Also, your income. What do you make as opposed to the debts you have? So if your DTI is looking kind of crazy, that actually affects approvals as well. And they'll say it on the letter.
Right.
Even if you get denied, it'll say it. Dang, I hate when I blank. It says like current balance is high. That's for utilization. Or it'll say that your credit to debt ratio is high. That means that your DTI is high. So that's also another reason why you will get a lower approval. If you got a whole bunch of loans out and you make $50,000, they like, yo, how you paying them? How you supposed to pay us? The math ain't mathing.
Something's off.
Something's off. So that's why you will get a lower approval. The only thing I would say after that is be good with that card and see if when I say good, I mean use the card with your anyway money. Don't randomly make up things to buy. I'm not saying go on a shopping spree.
Right.
Use the card with your anyway money and then see exactly in 6 months how much you've been spending monthly. Once you see that, if you're spending actively on that card because that's what they want you to do, then I would say ask them for a credit line increase.
There you go.
When you ask, there's one question you want to ask though. After you ask for the credit line increase, that's one question. The second thing you want to ask is this increase going to give me a hard inquiry or a soft inquiry? a hard pull or a soft pull.
Mm-hmm.
Is this going to affect my credit or not affect my credit? If it affects your credit, it's a hard inquiry. You don't want that.
Facts.
If it doesn't affect your credit, it's a soft pull, and that's game on every single time.
There you go. Beautiful. Masterful. Can I be honest with you?
Yes, yes, sir.
I caught that. We're going to have to talk about that. So, can I be, no, let me be honest with you. I follow you on Instagram.
Mm-hmm.
You follow me, I follow you. Every time I go on Instagram and I see you post, you on a flight, you checking in a hotel, you checking out a hotel, you getting in a Uber, out of a Uber. You always on the move. If you're not teaching, you moving. I don't even know if you sleep for real. That's another conversation in and of itself. I wanna travel like she did 3 travels. I want to catch flights, not feelings. I want to be in and out of hotels and getting upgrade statuses and diamond this and somebody else. If me and you catching a flight, I know I paid less for the flight than you did. I want to learn from the best herself, the travel hacking queen herself. Can we talk a little bit about that?
Let's go.
I want to provide as much value as I can to everybody that's watching this. I want to learn how to travel hack. I want to learn how to travel hack to the best of my ability so I can go all over the place. Where do I start? Where did I begin? One of the biggest things I hear when it comes to travel hacking is like status.
Mm-hmm.
So I'm assuming that's where you start. If so, talk a little bit about that and how that kind of lays the foundation for us as aspiring travel hackers. Talk about that.
All right, so I'll start off with status since you mentioned it.
Let's do it.
Status absolutely matters.
Okay.
Okay. Now, in a lot of worlds, we don't like to have a status system or a classes system, but it 1,000% matters.
Mm-hmm.
So if you're looking at different flying institutions or hotel institutions, they like to see loyalty, right? They like to see that. So when it comes to why I get upgraded with certain companies a lot is because I have higher status. So with Delta, I was working on getting Diamond. I was like 4,000 miles away from hitting Diamond, but I have platinum status with them, right? I'm a repeat platinumer.
Gotcha.
So I had it last year. I have it this year. I will have it again next year.
Gotcha.
That means that I fly a lot with Delta. And so when it comes to getting upgraded, if the seats are available, I could book a main cabin and get bumped up. I post it every single time.
And you ask for it or they do it for you automatically?
I request it and I can request it.
Okay.
So inside my profile, I always request for the Comfort Plus or first class.
Gotcha.
I do it on my airlines for American Airlines as well. And if the seats available and it's the flight is not sold out, because I'm platinum, I'll get bumped up like. Matter of fact, I'll show you. I'm going to Vegas in July.
Okay.
I already got the upgrade.
Gotcha. So but that's a byproduct of you just naturally traveling as much. So if we want to travel hack, that means we kind of have to.
You can get it. I travel a lot, but I got it initially from my credit card spend.
Okay, got you. So I don't have to travel a lot to get the travel rewards that allow me to hack. It's more so about having the right cards. Mm-hmm. So from what I understand, I know what are some of those key cards that we could use to become travel hacking? I want to be a travel hacker warrior, right? What are those cards that I'm looking for? What am I looking at?
All right, so I mentioned some of them already.
Okay.
The Bilt card, definitely a card you want to have.
Gotcha.
Chase Sapphire Preferred, definitely a card you want to have. Mm-hmm. Now, American Express Everyday Preferred or the Everyday That Clear card, that's not necessarily, you want to start with that because that's a card you can get in really easy and you get Amex points for that.
Gotcha.
But you want to get into the luxury side now, so the golds and the platinums.
Gotcha.
Because those are going to give you more relationships and we're looking for more relationships. American Express Platinum, you get automatic Marriott Gold, Hilton Gold. Now, it's not the highest status with those two institutions, but it's a status you didn't have to pay for or stay at a hotel for. You literally got it just because you have the card.
Gotcha.
The reason why I mentioned the Bilt card is because it's connected to Hyatt. Now, the reason why I get as many free nights as I do is because the Hyatt card or even the Hyatt loyalty program is one of the best hotel programs out there.
Talk about that.
That is, listen, don't come for me, all you Marriott lovers and Hilton lovers and IHG. Don't come for me, okay? I ain't sent for y'all. Stay over there. So the Hyatt... the Hyatt loyalty program, in my opinion, is the best because you get the most bang for your buck. I can go to I want to say like a category or a 4-star Hyatt hotel. Like I love the Grand Hyatt and Hyatt Regency in Atlanta, the Grand Hyatt in Buckhead and the Hyatt Regency in Atlanta. Okay. That hotel is pretty nice. They just upgraded a Regency too. Really, really nice hotel. Clean. I mean, like super clean cut. That hotel costs like anywhere between $150 to $300 a night, ranging on what's going on in the area. I can book that same hotel room for 9,000 points per night.
I'm sweating. Okay.
If that was a different hotel system, it would cost me way more points.
Got you.
So that point system, like the relation of how much points you need to actually book through their system is like astronomically low. They have done things like moved hotels into higher categories so that you have to spend more, but they still have a lot in certain areas. Some of the hotels are like it's probably the only hotel there. Like my friend, I gave him the rundown. He went to Colombia. He stayed at a brand new Grand Hyatt. Because of COVID, it wasn't, they barely saw any traffic and they had to close down right after they finished like the full opening. It was 9,000 points per night it was damn near 5-star because it just opened. The hotel was brand new in Colombia. He was there for like 9 nights. He spent 54.
Crazy.
I'm bugging. He was, I'm bugging. He was there for 7 nights.
Okay.
He spent 63,000 points on a week. Now certain hotel, that's 1 night. 7, 1.
Crazy.
How long you outside? For a week.
Right.
Hyatt also, outside of that, Hyatt, you can normally only get to Hyatt through Chase. But because Bilt got that open door now with them, you can go either way. I would say for travel hacking, if you are loyal to I want to make sure I stay on topic because I can go anywhere. If you are loyal to a hotel chain, I would have their personal credit card. Outside of that, I wouldn't have too much like every hotel card, period. It doesn't make sense.
Gotcha.
I have a Hyatt card because I like staying there. And every time I spend $5,000 on the card, I get a free night.
Gotcha.
5,000, free night. 5,000, free night. 5,000, free night.
If y'all see me on a flight after this, you know who I figured out from. I know we have to start wrapping up. Two things. First thing, travel. We understand how to travel hack the hotels. We understand how to travel hack the flights. Is there travel hacking methods for car rentals?
Yeah.
Talk a little bit about that.
So, and it's crazy because the lines be insane. So, like I told you about the Amex card, that's a travel card. Automatically for having that card, you get executive status with National.
Okay.
Just for having the card, you did not book a stay.
Okay.
So now when you go to the airport, you can book a low tier car and walk out whatever car you want. And there's no line. You'll be out in 10 minutes or less. I had a BMW X5 for like $80.
What card is this again?
Platinum. Amex Platinum. I really only say to get that car is if you know what you're doing with it. If you don't, it's just $695. It's gonna be wasted.
If y'all see me in what's the name of the car?
BMW X5.
After this interview, you know who I got it from. Sheeta 3. I appreciate you more than I could put into words, yo. You're the greatest. You're the greatest. I love you to death, yo. As we begin to wrap this thing up, I know that of course you have an event coming up, a huge event coming up, shutting the city down.
The whole city.
Talk to the people about that, where they can find out more about that, and how they can pull up, because I know they want to come through. Talk to them a little bit about that.
So listen, talk to me right here.
This camera.
Talk to me right here. All right, listen, y'all. Play for Play events is bringing in real estate under $10,000. So what Play for Play is a intellectual boxing match between the best entrepreneurs who do what they say and say what they do. They're going to go back and forth in a ring. Actual ring. I built it. You've seen it.
I've seen it.
I built the ring out. And they're going to be inside of it to give you their best game, to really show who's the top dog. And you're the judge. It's not me. You're the judge. But if you can get into real estate for under $10,000, I'm pretty sure you would not let anything stop you. On top of that, right after you learn these 4 methods that these individuals, and they can't come into here with less than 30 deeds.
30, read that?
30.
Ooh-wee.
Doors, you can't have less than that. And one of them is bringing in a binder. I told me can't break my stage.
Crazy.
After they teach you what they did to get what they got, and they got to teach it to you because I'm a teacher and I got the Apollo broom and I will boot them off if it's not what I'm liking.
Facts.
My man Prada Jones is going to teach you how to get the funding to get the deal yourself.
Beautiful. Beautiful, beautiful. And what date is this happening?
July 22nd.
Is that confirmed? That date?
Yes.
Okay.
Deposits have been put down.
There you go.
Location is locked.
There you go.
Contracts have been signed.
Got you.
July 22nd, 11 a.m., the doors open. Bring an empty belly. We're going to have notebooks available. Come learn, come network, because this is going to be the last summer that you go through and you ain't get yourself a property.
Come on now. And where's this at? July
22nd.
Doors open at 11 a.m. and the location is?
Brooklyn, New York. It's at Williamsburg Music Hall.
There you go. There you go. Was that the same one that was at the time before? This is a different spot.
It's a different spot.
Different spot.
With a
First
little
one,
more
I was, ladies and gentlemen, I was there for the first one. I had an amazing time. The food was wonderful. The knowledge was incredible. Sheeta was amazing. It was a great time. So the second one got to be bigger, got to be better.
Got to be better. Got to be bigger. Got to be better.
And this is a different spot?
Different spot.
Beautiful. Sensational. And the link for the event will be in the
bio.
description.
Yep.
Got you. Beautiful. Beautiful. I appreciate you, yo.
Yeah, I'm telling you, it's gonna be incredible. And what we planned so far, I know for a fact the only thing that's really stopping you is you. So if you get the right information and you have the funding to go and execute yourself, and you really don't have a limit. I used to think getting a real estate, I need $100,000, $200,000, and I'm like, yo, you picked up a property for $5K. What? If you knew it was that easy or was that simple, I don't want to say easy, it was simpler, it was a smoother process, I'm pretty sure if you wanted to get into real estate, it would not stop you from getting in. So, I mean, last time we did, turning house assets or liabilities into assets with Turo and Airbnb, and we did some credit on the back end. This time we're doing real estate, and it's the only thing you got to do, man. Get in the ring.
Pull up. Play for play.
The verses is real.
Ball for ball.
Gem for gem.
Come on now.
Round for round.
Round for round.
They got to bring that all sauce, no fluff.
All sauce, no fluff. And like I said, I was there for the first one. It was no fluff. It wasn't any cookie cutter. Well, this is how you... No. It was real deal.
Straight to it. Masterclass. That's how I want it.
Absolutely sensational. I'm excited. Like she said, ladies and gentlemen, the link, I don't know what camera is on. The link for this for the event will be in the bio, and all of Sheeta 3's information as well, from Instagrams to socials and beyond, will also be in the description. I'm very thankful to have you back here on this platform.
Appreciate you for having me, man.
I appreciate you for sharing your knowledge and your expertise with my people. And I appreciate you for tapping into this episode. And if you haven't already, what are you doing? Listen, take a second, take a minute, take an hour out of your day right here, right now, to just go ahead, slap that like button. And if you're listening on an audio platform, leave a review and tell a friend to do the same too. All right? I appreciate each and every single one of you, and make sure you stay tapped into the Marvin Francois Show. But as always, I'm Marvin Francois. This is Rashida Henriquez, aka Sheeta 3. Y'all have been good. We've been great. This has been amazing. And as always, thank you and God bless. We are out of here. Peace.
Have a good day.